Tariff relief on Canadian steel and aluminum exports could lift mining and resource holdings in your TFSA starting today. This is Modern Investing Techniques, episode 142. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,716, up 0.3%, while the NASDAQ Composite finished at 26,345, up 0.2%. The TSX Composite closed at 36,367, essentially flat on the day, though mining gains and the tariff suspension actually pushed it up 0.9% and left it just 0.3% below its all-time high. The Fed minutes and the Treasury doubling debt buybacks to $4 billion per operation from September 9th are now sharing the spotlight with rate signals. Sector leadership sits with base metals and resources, while broader tech rotation shows mixed follow-through. Remember, we covered AMD 14 days ago on post-earnings AI positioning, and it closed up 0.99%. The lesson was to wait for volume confirmation before sizing the next rotation name. Our simulated portfolio sits at a cumulative $333.39 across 50 trades at 56% win rate, though the rules-based record that began August 18th has no closed trades yet, so matched window alpha versus the NASDAQ stands at 0 for the current method. Selling cash-secured puts at higher deltas than the common 20 delta recommendation lets investors collect premium while improving the odds of actually acquiring shares they want to own. The approach treats the premium as compensation for waiting, similar to placing a limit order that pays you until it fills. In today's environment of tariff relief and sector rotation into Canadian resources, the strategy suits names with solid balance sheets where you would happily take delivery. Implementation starts by scanning the options chain on a platform like Interactive Brokers or Questrade for 30 to 45 delta puts on stocks trading above key moving averages, then sizing the position so the cash reserve covers 100 shares per contract. The tactic has historically performed best in sideways or mildly bullish markets, where implied volatility remains elevated but fundamentals support ownership. The main risk is opportunity cost if the stock rallies sharply before assignment. Always verify the underlying meets your fundamental criteria first, rather than chasing yield alone. A 20 delta put expires worthless 80% of the time, which means an investor chasing only premium will miss owning the stock on the majority of occasions when the price moves favorably. Higher delta puts raise the probability of assignment while still generating income, aligning the trade with actual ownership goals instead of pure yield hunting. Platforms such as Questrade display the full options chain with delta, volume, and open interest, so users can compare 30 delta versus 20 delta contracts side by side before placing the order. This is a simulated flash trade for educational purposes only, with no real money involved. Today's pick is MFC.TO, Manulife Financial on the TSX in the financial sector. The strategy is a dividend strength entry on growing capital confidence and sector rotation into Canadian financials. The hold period is same day only. Invalidation comes on a close below the 50-day moving average on volume above the 20-day average, which would invalidate the rotation thesis. The catalyst is dividend strength signals and capital confidence update in the latest earnings release. The technical setup shows price holding above the 50-day moving average with volume tracking near the 20-day average and nearest support at that 50-day line. Risk assessment sets the stop loss at a 3% decline from entry with maximum acceptable loss capped at the $30 position level. The target is +1 to +2% on the session close. Confidence sits at medium because dividend momentum and sector rotation align, yet broader rate uncertainty leaves one variable unresolved. This setup demonstrates how to screen for dividend resilience inside a single sector while respecting concentration limits and forcing explicit invalidation criteria before entry. Yesterday, we simulated buying AAPL at the Tuesday open of $307.75 and exited at the Thursday close of $305.26. The result was a loss of 0.81% or $8.09 on a $1,000 position. The redesigned catalyst failed to overcome rotation pressure once volume confirmation lagged. That outcome produced the rule to require volume above the 20-day average before entering any catalyst-driven name already in a sector rotation. The options chain scanner on Interactive Brokers TWS filters for delta, expiry, and implied volatility ranges, so investors can quickly surface higher delta cash-secured put candidates instead of defaulting to 20 delta yield plays. It gives an edge by surfacing contracts where assignment probability aligns with ownership intent rather than pure premium collection. Canadian and US users on the Pro or Premier tiers can run it directly inside the desktop platform at no extra cost beyond commissions. The tool displays delta values, volume, and open interest in real time, allowing users to compare 30 delta versus 20 delta contracts on the same underlying before placing an order. Wealthsimple Trade watchlist alerts let you set price and volume alerts on individual TSX names to catch tariff relief rotation without constant screen time. The tool notifies on crosses of the 50-day moving average or volume spikes above the 20-day average, letting users act on the same signals used in today's mining gain analysis. Available to all Wealthsimple clients at the basic tier, alerts can be configured for specific percentage moves or absolute price levels. The TSX rose 0.9% as base metal names led on news that US-Canada tariffs on steel and aluminum would drop to 25% from 50%. The move leaves the index only 0.3% below its all-time high. Add XIU to the watch list and review any base metal holdings for a potential add on the next volume-confirmed dip. A single messenger RNA option contract gained 711,500% on news that Moderna's messenger RNA vaccine showed positive melanoma results, turning a $1 stake into roughly $7,000. Avoid chasing single-name biotech options and instead watch the broader healthcare sector ETF for any sustained volume increase above its 20-day average. The Treasury doubled its debt buyback cap to $4 billion per operation beginning September 9th, targeting longer-dated nominal coupons and timed just hours before a $16 billion 20-year sale. Monitor the 10-year yield reaction over the next 2 sessions, and if it compresses further, consider extending duration in the fixed income portion of a balanced TFSA. Canaccord Genuity shares strengthened on dividend focus as investors priced in sustained payout growth following the latest earnings update. Review CF.TO on the next pullback to the 50-day moving average if volume remains above average. Our simulated portfolio now shows 50 total trades at a 56% win rate for cumulative profit of $333.39. The rules-based record began August 18th and has no closed trades yet, so matched window alpha stands at 0 for the current method. Average return per trade sits at 0.67%, with a best of 20.11% and worst of minus 11.80%. The 50-trade history reflects the prior exit rules, while the new 5-session discipline starts with a clean slate and will produce its first matched window alpha once the initial hold completes. Imagine you hold a broad Canadian equity ETF and notice longer-dated yields dropping after the Treasury doubles its debt buyback cap to at least $4 billion per operation starting September 9th. The mechanism works through reduced net supply of longer maturity bonds, which lifts their prices and compresses yields. Lower yields then support higher equity multiples because the discount rate applied to future cash flows declines. With the announcement timed between refunding cycles and just hours before a $16 billion 20-year sale, the move signals officials responded to market pressure rather than following a preset schedule. Professionals always check the Treasury operation calendar and the size of each buyback relative to the $2 billion prior cap before assuming the yield effect will persist. The concrete misconception to avoid is treating every debt management announcement as neutral background noise. The single-sentence fix is to map the buyback size and timing directly against the 10-year yield reaction before adjusting duration exposure in your fixed income sleeve. Before we wrap, pull up the options chain on one Canadian financial name tomorrow and compare the 30 delta put premium against the 20 delta level to see how assignment odds shift. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. Quick tip from the network. Try Models and Agents for beginners next. Artificial intelligence explained simply for beginners and curious teens. Every NARA Network show is free at naranetwork.com. The age of AI puts real builders on the phone with an AI host. Apply at naranetwork.com. Age of AI apply. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?